Welcome back to our channel, where we break down the latest in stock market news and analysis. Today, we're focusing on Super Microcomputer, a company making headlines in the tech world. With an upcoming earnings announcement just around the corner, investors and analysts alike are paying close attention. So, let's dive deep into the details of what's happening with Nasdaq, SMCI, its market performance, and what analysts are predicting. Stick around till the end for our take on what this could mean for your investment strategy. First up, let's talk about the big event everyone is waiting for. Super Microcomputer is set to release its quarterly earnings report after the market closes on Monday, January 27th. This report is critical as it provides insights into how the company has performed in the past quarter and whether it has met, exceeded, or fallen short of expectations. Analysts are forecasting earnings of approximately 75 cents per share. As for revenue, projections stand at an impressive $6.45 billion. These figures, if accurate, could shape the narrative around the company's performance and influence its stock price in the coming weeks. Now, let's look at how Super Microcomputer's stock has been performing recently. On Friday, shares of Nasdaq, SMCI experienced a slight dip, dropping by 14 cents, which is about 0.4%. The stock closed the day at $33.27. Trading activity for the day was notable, with a volume of 31.68 million shares exchanged. This is higher than the company's average trading volume of 27.19 million shares, indicating increased interest or activity surrounding the stock. Super Microcomputer's key financial metrics give us a clearer picture of its financial health. Quick ratio, 1.93, indicating that the company has sufficient liquid assets to cover short-term liabilities. Current ratio, 3.77, which reflects a strong ability to meet both short-term and long-term obligations. Debt-to-equity ratio, 0.32, showing that the company has a relatively low level of debt compared to its equity. When we look at the stock's performance over a longer timeline, it's been a bit of a roller coaster. The company's 50-day moving average stands at $33.83, while the 200-day moving average is significantly higher at $45.10. Over the past year, the stock has traded as low as $17.25 and reached a high of $122.90. That's a huge range, reflecting both volatility and potential opportunity for investors. Super Microcomputer currently has a market capitalization of $18.61 billion, placing it firmly in the mid-cap category. Its price-to-earnings P ratio is 16.70, which can be interpreted as reasonably priced given the industry averages. Additionally, the stock's beta is 1.31, indicating that it tends to be more volatile than the broader market. This higher beta suggests that the stock's price movements are more sensitive to market fluctuations, which could mean higher potential rewards or risks for investors. Now, let's talk about what the experts are saying. Analysts have been closely watching Super Microcomputer, and their opinions have been mixed. Here's a breakdown of recent ratings and price targets. Northland Capital Markets recently upgraded the stock to a strong buy, signaling optimism about the company's future prospects. On the other hand, Goldman Sachs took a more cautious stance, lowering its price target from $67.50 to $28 and assigning the stock a neutral rating. Similarly, JP Morgan Chase & Company downgraded the stock to underweight and revised its price target from $50 to $23. Argus Research also downgraded the stock from a buy rating to a hold, reflecting uncertainty about the company's near-term potential. Finally, Wedbush Securities reaffirmed a neutral rating, lowering its price target from $62 to $32. Out of all the analysts tracking this stock, 3 have issued a sell rating, 11 recommend holding, 4 suggest buying, and 1 has assigned a strong buy rating. The consensus rating is hold, with an average price target of $62.89. So, what does all this mean for those holding or considering investing in Super Microcomputer? The mixed ratings and revised price targets highlight a level of uncertainty in the market. Analysts seem divided on whether the company's growth potential outweighs its risks. For investors, it's important to approach this stock with a clear strategy. If you're considering a position, pay close attention to the upcoming earnings report on January 27th. A positive surprise could push the stock higher, while disappointing results might trigger a sell-off. Another factor to watch is the broader tech industry's performance. Given supermicrocomputers' role in providing high-performance computing solutions, its success is often tied to trends in cloud computing, AI, and data center expansion. If these sectors continue to grow, the company could see increased demand for its products and services. To wrap things up, Supermicrocomputer is at a critical juncture. Its upcoming earnings report and recent analyst ratings provide both opportunities and challenges for investors. Whether you're a seasoned trader or new to the market, make sure to do your homework and consider both the risks and rewards before making any investment decisions. If you found this video helpful, please give it a thumbs up and consider subscribing to the channel. Your support helps us continue to bring you in-depth market analysis. Thanks for watching, and I'll see you in the next video. Take care.